Coach Tanya Agee. I am CEO and financial coach at TLC Financial Coaching. My mission is to help singles or individuals and families take control of their finances, to remove or break free from their financial stress, and to build a more secure future. As part of that mission, I believe in surrounding my clients and followers with the right resources and trusted professionals who can support them along their financial journey. That's why I've partnered with key experts in areas who can provide specialized guidance during important life events. So today I'm very excited to introduce you to someone that I both trust and respect, Steven Kobrin. So let's just jump into it. Hi, Steven. How are you today?
I'm wonderful, Tanya. Thank you. How
Great.
are you today?
I'm doing very well, very well. So, can you introduce yourself and share a bit about your background and expertise in your field?
I would be glad to. Thank you. Thank you so much for inviting me.
Absolutely.
I'm a rare breed. I am one of the few people that actually has a specialty in the world of financial services. I am a master of the craft of life insurance. I am second generation in the business. I have my own practice for over 30 years. And contrary to the trend in this industry where everybody sells everything, I've got this product that I know inside out.
That's great. That's great. And what specific problems do you help clients solve, and what makes your approach unique?
Well, I will answer the first part of that question by talking about my relationship with you and coaches in general. You guys provide a very needed service, and you guys help people get out of debt and into savings typically. That's one of the most important accomplishments you make for your clients. And I, with the products that I provide your clients with, help them when something bad happens, like a death or disability, avoid the issue of getting out of savings and back into debt. So I see that my work secures your work by using the right combination of insurance products. As far as the second part of your question, we have rehashed the ancient art of what had been called field underwriting. In the good old days, what would happen is that a life insurance agent would meet somebody, get to know that person, have a general idea of their underwriting issues, and then go back to the office, call up an underwriter and say, hey, Joe, I've got somebody with slightly elevated blood pressure and they're 45 years old and a little bit overweight. Give me a ballpark price type of thing. And they'd have a rough idea of what the cost. These days, obviously, underwriting is more sophisticated and medicine is more sophisticated. So it takes a little extra work. And we call it now pre-qualification, but the same function is served, which is we help people get a rate, not just a low rate, but a reliable rate before they even apply for coverage. So this way they know what the cost is going to be. They know how they'll get approved at the rate that was quoted, and they know it's worthwhile going through 2+ months of underwriting because at the end of the day, they'll get what they want. That's the power of pre-qualification.
Very neat. That's something I just learned. That's great. Hopefully my clients and followers are learning along with me. So I know that there are a lot of misconceptions and fears about talking about the insurance industry. So, from you, what are some of the common misconceptions people have about your industry and services?
It's an interesting question you raise because if you look at industry data year after year after year, and there's independent bodies that do surveys and stuff, and every year the result is the same. Americans are either underinsured or uninsured when it comes to life insurance. Only 48% of the people have the insurance, so is that because of misconceptions? Kind of. Um, I think there's a combination of factors. Um, I think that it has to do with, to tell you the truth, fear. I think that people have not been encouraged to think about important things in life, such as their legacy, such as their meaning of life, such as what will happen to those people to whom they made a commitment, family, business, and so on. People don't think that way. So consequently, they think like, well, I don't want to have to think about what happens when I die because someday, there's a cultural resistance to thinking about those parts of life which are inevitable, but which we typically don't deal with. And I think so, I call that the fear factor. I think there's a fear that is at the bottom of people when they're going on the internet and looking at financial stuff. Yeah, they'll look at investments that'll give you a 12% return, but something that has to do when you die, forget about it. Okay, I think there's a fear factor. And I will say one other thing regarding the fear factor. There's a fear of rejection. And I think that's very prevalent. And why is there a fear of rejection? It's because a lot of people, most people, I will say, have some kind of underwriting concern that needs to be addressed. Not everybody is of the perfect weight and the perfect health history and has a blemish-free criminal record and financial record and driving record. Okay. And a lot of times they have, whether it's blood pressure or the fact that they're a scuba diver or whatever it is, they have a something, or they got treated for depression, or they had a rough time in their life and they took some anti-anxiety medication. They have things like this, and they went to a broker that didn't quite know how to handle it, didn't quite know how to present it to an underwriter, didn't know which company to go to get a price, and they ended up getting rejected. They ended up paying too much, and like, forget about it. So I think a big reason why people are underinsured is that they think it's too hard to get. They don't want me. I'm not insurable. And with the experience of having this business, I can realize there's been a lot of people that have been mishandled, mistreated, and they come to me and they say, I don't know if I want to go through this again because I don't want to get rejected again. So I have to say, don't worry, we're going to start off, a new start, and we're going to pre-qualify you. We're going to test the waters before you make a commitment. There's a way to deal with this. And for a lot of people, it's a revolution because this was the first time they were actually given the personalized handling that they should have had in the first place.
Wow. I mean, I agree with the whole fear factor, definitely. Also, I mean, in my field, a lot of people think that, I mean, I've had questions like, well, where does that fit in the debt snowball? It's like, it's not a debt snowball, it's a budget item. These are things you should have in your budget. You should be planning for this now, not down the road. So a lot of people think it's either going to be too expensive. I'm young and I don't need this right now. So speak to that for a minute. The being too young. What age do you recommend people get life insurance?
Newborn. No, let me tell you why. No, I have sold so much life insurance. Why is it that when a family has a baby, mom or dad or grandma or grandpa will buy a life insurance policy on that baby? It used to be, I used to have clients like from the old country, like I remember one from Ireland. 30 years ago, she was in her 80s. So you could see she dated back to the 1800s. And she came from Ireland, and infant mortality was unfortunately a big thing. So they as soon as a child was born, they automatically got a policy on the kid because they wanted to provide that kid with a decent burial. That was a big reason why people used to buy life insurance on children. Okay, now you fast forward to today, infant mortality is is a much smaller concern. So I have the coverage because of two reasons. One is to secure insurability. The parents have been around the block. The parents know that when you get to be 25 or 30 or 35 or 40, the price goes up. It goes up with age, okay? So, but if you start when a child is so young, you lock in to a really low rate. So that when the child becomes 25 or 30 or 35 or 40, they got a bunch of life insurance at a discount, and the overall cost of the policy is so low that parents gave them quite a financial gift. That's one reason. The second reason is this, again, to secure insurability. I have a lot of clients who unfortunately contracted type 2 diabetes when they were older, or came down with breast cancer. Their mom had breast cancer and their grandma had breast cancer. There's a lot of things that happen to people. There's a lot of hereditary medical conditions that people face that makes it harder or more expensive to get life insurance. So they're like, I'm going to do my kid a favor. I'm going to get a policy on this kid so that if unfortunately one of these conditions manifests itself when they're older, they already have coverage. And they don't have the dilemma of like it's too much or they might not even qualify at all. They're already insured. And there's a third reason. The third reason is that with some policies that can develop cash, if you let it ride 20 or 30 or 40 years, there can be a big bucket load of cash available for when the kid turns 25 or 30 or 35 for a down payment or to start a business or to pay for a fancy wedding, whatever it is. That's when the whole life or the permanent insurance cash value policies come in handy. Given enough time, they can give you a lot of cash to play with.
Let's see. Okay. Well, you've given us a lot to think about today, Stephen. Now, what's the best way for somebody to reach out to you if they have questions or if they want to work with you?
I appreciate your asking. The website is stevenkobrin.com, STEVENKOBRIN.com. Got a blog full of information plus a contact page.
Excellent. Well, thank you so much for joining us today, Stephen. And I'll be sure and make sure that my followers see this often.
Thanks, Tanya.
Thank you.